My name is Kamal Warren, and I day trade the FTSE 100.
So what kind of skills and character traits would you say makes a good trader?
Well, it is, as far as I'm concerned, what makes a good trader is a lot of practice, a lot of patience, and anyone who's serious in trading should treat trading as a business. Treat your losses as a business loss, and treat your profits as business profits, and treat it respectfully, because it may be a strange choice of word, treating profits respectfully, but because from experience I know once you have a string of winning trades, that's when you tend to do things that you wouldn't normally do, and you tend to get into trades otherwise you wouldn't. So to be a good trader, I think that it requires a lot of time and practice, because it's like if you take a business, like any other career profession, it takes you maybe 3-4 years going through university or a degree or a diploma, whatever. And you go through a period of training before you become good at what you do. So if you apply the same principles to trading, why should it be any different? So similarly, trading, to be a good trader and to do it successfully, I think it requires a lot of time and training and patience, and hard work pays for itself.
And probably a fair bit of self-control as well, because as you said, if you're on like a winning streak, you know, you want it more, don't you? So you.
Yes. I mean, I think I should say that's a very good point, because I think it's not a fair bit of self-control, a lot of self-control, because a lot of the big part of trading is the human psychology. What goes into what goes on in your mind plays a bigger part in making you a profitable trader or not.
So now we just spoke about winning, and now perhaps we'll speak about losing. So have you made any big mistakes?
I have made a lot of mistakes in the journey of becoming a trader full time. The biggest mistake that I still continue to make is opening a trade too early, before the technical indicators confirms it.
Right.
And that's because when you're looking at the charts in the markets, you just sometimes you just jump into a trade thinking that the technicalities are going to confirm it. And that is a very big mistake that more than often, I will end up in taking a losing trade. The other mistake that I commonly make, or that I've made a lot in the past, I try not to make as many of them nowadays, closing out a position too early. Because, for example, if you have had a losing trade before your second trade, and your second trade have just gone into a profit, but it has not hit your limit yet, you're constantly thinking of your loss. You want to cover your loss, and without waiting for your second trade to hit its target, you just close out because you just want to cover the loss.
Okay.
And if you had just waited, time will tell that it would have just moved and hit your target. And those are the mistakes I've made, and those are, I think, the mistakes that most traders make in trading.
So why is it that how do you keep making the same mistake? Why they're not closes early?
Well, the first mistake is just myself. It's just human mind. The second mistake, the way I try to overcome that is I try not to interfere with my trades in this way. Normally I'll put a profit limit, and I just wait for that to be hit, and I would not close out a position myself.
Yeah.
And the second trade, going back to the earlier question, so the first trade, it hits the profit target. If it doesn't hit, I just let my stop take me out. And the second trade, normally I only close when the market closes at 4:30.
Okay.
Yeah.
Now, would you say it boils down to being as simple as finding trends and riding them?
Well, trends are, as the name suggests, the direction which the market is moving, either up or down. And trading in the direction of the trend is always preferable than trying to go against it. Very famous saying in the market is the trend is your friend. But as we all know, price doesn't go in a straight line up or down. It goes in a direction, it reverses, etc., etc. So spotting trends, yes, trade in the direction of the trend, but the crucial bit is, where do you enter a trade? And that's where other technical indicators come in. For example, Elliott waves or Fibonacci retracements, etc., or even chart patterns for that matter. So the crucial bit in trading is, when do you enter a trade, when do you open a trade, and where do you place your stops, i.e. where do you limit your losses. And if you look at a trend, you can't just jump into the trend, because you have how much you've got a pot of capital, how much you want to risk, and the entry into a trend is where the other indicators come in. So yes, it is spotting trends, but it's not just as simple as that.